Good day, my name is Christel from Frans, the Klerk Independent Technical Analyst. Issy wanted us to look at Exxaro. Now these are weekly graphs, and Issy, we can clearly see for the last consecutive 2 weeks, this share has taken support there at 119 Rand 28. So we might say that this is a possible double bottom that is in the making, but that double bottom will only be confirmed when 141 Rand 28 changes into a support. Some might even call this a possible tweezer bottom, but the tweezer bottom will only be confirmed when this high, waiting there at 128 Rand 98, changes into a support. Yes, my stochastic indicator is almost in oversold levels. And remember, with the stochastic, you want it to be below a 20 or even a 10. But more importantly, you want this blue line, the shorter moving average, to break upwards through the orange line. So at the moment, the momentum to the bottom is still in place. But this candle, this harami candle, this positive candle with the long lower tail implies that despite the weakness in the pullback, there were still buyers who started to accumulate this share. Where can you buy it? Above 128 Rand 98. Stop loss you can use is 117 Rand 60. What you can do is you can maybe go back a little bit into the history and maybe identify a stronger horizontal line, which is around 115 Rand and 90 cents, and use that as a stop loss. I think this graph looks positive. But very important is wait for that share to change that 40-week moving average into a support when you are a long-term investor, because that will be the confirmation that the long-term sentiment towards the share has changed to positive. Also take note how closely this trend line, this neckline of this possible double bottom is waiting to that 40-week moving average. And that confirms to you how strong and how important these resistance levels are. And that 40-week moving average is waiting at 142 Rand 89. When these levels change into a support on a weekly close, the positive sentiment will be on the table for Exxaro. Hanu wanted us to look at Galan Lithium. They're listed on the Australian Stock Exchange. And Hanu, I think this is actually a beautiful graph. Why? Because there are a couple of technical indications here that tells us there are buyers who are optimistic about the share. And one of them are the fact that this share, Galan Lithium Limited, listed on the Australian Stock Exchange, has changed that red line, the 40-week moving average, into a support. And that is seen as positive. More importantly, it bounced and retraced. And then with this beautiful doji candle, confirmed that level as a support. And that is waiting there at 18 cents. Now, this is also a possible, and I'm saying possible because the optimism will only be confirmed there above 24 cents. A beautiful morning star formation. Now, a morning star formation is a bearish candle or a negative candle with a doji candle and then a bullish candle. No matter what that, bullish engulfing candle or marabuzu, a positive candle. But when that strong resistance changes into a support, that morning star formation will be confirmed. Now, a morning star formation is a turnaround pattern. It tells us that the evening and the dark times are gone and that the morning might be rising. A new sunrise is on the horizon. So technically above 24 cents, Hanu, lithium is a buy. Galan Lithium is a buy. Stop loss that you can use is that 40-week moving average at about 18 cents. Or if you want a bigger stop loss, obviously, technically below this 13 cents, we can assume that the momentum to the bottom can continue again. If we go back, we can see there's some nice targets to the top, 27 cents, and then obviously 33 cents and even higher. I mean, this share were at some stage as high as about 68 cents. I think this is a beautiful graph. Yes, it is obviously almost overbought and it looks like that shorter moving average is running out of steam, but my candles is positive. And above that 24 cents, that morning star formation will be confirmed. Reinhard wanted us to look at Aspen. Reinhard, Aspen is one of my favorites at the moment on the JSE. Why? Because it's coming from the ashes. If we look back and we look at Aspen, we can't believe that this was a share that traded around 385 Rand in July 2016. But what is positive about Aspen is is that one, it has changed that red line, the 40-week moving average on a weekly graph into a support. Tick, that's done. It tells me the long-term sentiment is positive. What is also positive for me about Aspen is this possible inverse head and shoulder formation with a big head and then multiple right shoulders. So if Aspen can confirm and keep these levels a support, when Aspen changes this neckline into a support, that confirmation, the optimism of this inverse head and shoulder formation will be confirmed. What is the target of that formation? The conservative target is obviously, let's take one of these right shoulders and project it upwards from that neckline where it will be confirmed, and that is waiting there at about 127 Rand 97. So if that formation is confirmed, my first target is around 143 Rand 62, and the full target of the formation is the full head. The length of the head projected upwards from where the formation will be confirmed, which means Aspen can go to around 181 Rand and 1 cent. Where will my concern be again? Obviously, when the share starts to consolidate below these levels, waiting there at around 108 Rand 41. Now, if you don't have Aspen already and you want to nibble in the higher lows, because my stochastic is not in ideal territory, I mean, it's sitting at a 67, maybe start to nibble on small bits, as long as that 108 Rand 35, 109 Rand 76, these support levels here remain a support. Also here, we can maybe see a possible morning star formation, and that will also confirm the next higher low. I think it's a beautiful graph. Only below these levels, 108 Rand 35, I will be concerned about Aspen. There's some nice upside target on these levels. And to be quite honest, especially when the share has been rocked bottom, has been sold off the way Aspen has, sometimes it ignores the indicators and the candles tells the story. And the candles are telling me the buyers are keen to nibble on Aspen. Every time on a pullback, it just kept bouncing higher. Paul wanted us to look at gold. Everybody is talking about gold. Now, we've mentioned previously, and I want to just go back to put the gold price into perspective for long-term investors. I mean, this is a commodity that has done almost nothing, just consolidated in a band. But for the last 12, 18 months, this commodity has just skyrocketed to the top. And I've identified strong horizontal lines here that investors can use as resistance levels to where the gold price can possibly go. Now, yes, we know the uncertainty in the world increases gold rallies, but $1,611 is the strong next level that needs to change into a support. In other words, the gold price needs to change that level into a floor. It needs to start to consolidate above it before I can assume that the gold price can rise even higher. Above $1,611, higher levels to maybe $1,696. That's where my next strong resistance is lying. But also take note here and we've mentioned this before, $1,555. For a couple of weeks, the gold price tested that level and really tried to keep it a support. So it's at the moment below it. It's trading at $1,553. And remember, this is a weekly graph. So if the gold price closes below $1,555 on a Friday, I can assume that we can maybe see a little bit of a pullback. So where is my next support? Where can it pull back to? At about $1,486. Paul, that is where my next strong support is waiting. Obviously, you can use these levels there around 1,534 and 1,515, where you can see the support on the candles. You can use those as closer levels. But also take note this level at the bottom here, and that is waiting at 1,556. But take a look, Paul, it is very close to that red line as well, my 40-week moving average. And that 40-week moving average is waiting at $1,461. If the gold price starts to consolidate below that level, I can assume then that the long-term sentiment would change to negative again. So I think you're too late to buy gold. Your stochastic is extremely overbought, and you can see there's a divergence there. It has bounced, but retraced, or bounced, and that level there around 76 is lower than that retracement at 80, and that tells you loss of momentum. So we can maybe see even lower levels. 1,555 is the critical level on gold that you need to write on a piece of paper, and especially that 40-week moving average. If you want to chase the momentum, then yes, above $1,611, we can assume that the gold price can continue to rise to higher levels. Trevor also wanted us to look at the S&P 500. Listed on the US Stock Exchange yesterday, reached a brand new record high. The momentum to the top is clearly in place. And we've mentioned before that we are sitting here with a beautiful or ugly, depending on what side of the market you are, inverse head and shoulder formation. Massive left shoulder, head, and then a right shoulder. That was confirmed when that neckline changed into a support. And the overall target of this inverse head and shoulder formation is 3,600. So at the moment, we could see this week, and this candle is not finished yet, remember, a strong pullback after all the fears of the coronavirus. When will I be concerned about the S&P 500? Only when 3,221 changes into a resistance. And that is that strong support there at the bottom. I can assume that the momentum to the top will continue when that level there, that consolidation base, that 3,335 level, when that changes into a support again, I can assume that the possibility of that target of the inverse head and shoulder formation becomes probable. Obviously, the S&P 500 has rallied and skyrocketed to the top, and that means it's far away from that 40-week moving average. But at the moment, we can see strong bullish candles. Above 3,335, we can assume the momentum to the top will continue. I will only be concerned below 3,221 again. It's very dangerous to start to chase it now because of it being so overbought and because of it rallying so high. Wait for pullbacks, and if you believe that the rally will continue into the election year, then rather buy on the dips than trying to chase it at the moment.